Welcome to the Fear and Greed Business News Afternoon Report for Thursday, the 22nd of February, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 finished the day flat at 7,611 points. Essentially, utility stocks did well, while consumer discretionary and telcos not so well. Generally, the banks were lower, so too the big miners, but not Fortescue Metals Group, which reported. I'll tell you about that in a moment. Transurban, James Hardie and the energy companies, Woodside and Santos were higher. Origin, Xero and Coles also did very well relative to the market, but Woolies, WiseTech and Aristocrat Leisure were sharply lower. Aristocrat yesterday said the company's mobile first division, Pixel United, has signed a multi-year agreement with the NFL in the US to develop social casino mobile games. Interesting to see how that one turns out. However, the market at the moment is very much dominated by what's happening in earnings season. Story number 2, today was one of the biggest days for corporate earnings on the calendar. Qantas reported a drop in profit and its share price tumbled 6% on fears that earnings will be crimped. The good news for flyers is that airfares are falling. Tabcorp posted a $637 million loss, dragged down by a major cash impairment to its wagering and media business caused by fewer people gambling and higher tax rates. Now, in New South Wales and South Australia, Tabcorp pays double the amount of taxes paid by online bookmaker rivals. It's a function of being a once-time monopoly in the market. The group's lobbied both the Queensland and Victorian governments to even up the playing field. Hasn't done so in New South Wales and South Australia, and it is struggling. As a result, its share price tumbled 12% today, and Medibank doubled its interim net profit, boosted by strong growth in its non-resident market. Locally, business is powered by families and those taking out cover for the first time, according to the company. Its share price, though, fell more than 5% today. Story number 3, there were a bunch of retail stocks reporting today, and generally the tone was pretty positive, maybe better called mixed. Accessory group Levisa posted an 18% jump in sales in the December half and a 12% rise in net profit. Thanks to the rollout of its global store network, its share price jumped 10% today. Youth fashion retailer Universal said revenue was high, but only because they opened more stores. A stronger performance in November and December came amid increased discounting, helping to move stock. Its share price rose 13% today. Gourmet food producer Maggie Beer Holdings has tumbled to a bottom line loss of nearly $6 million for the December half because of a heavy write-down on its Paris Creek Farms high-end milk and yogurt business. Its share price tumbled 6% today. Australia's largest car dealership group, Eagers Automotive, lifted its final dividend slightly on the back of booming new vehicle sales at its 200-plus showrooms. Its net profit, however, was down about 8% and its share price fell 6%. And Super Retail Group, owner of BCF, Supercheap Auto and Rebel Sports, posted an adjusted net profit of $145 million, down 6%. Although sales were up 3%, its share price fell 6%. Plenty going on, as I said. Let's turn to the big miners in story number 4. Fortescue Metals was the biggest of the miners reporting today, announcing a 41% jump in first half net profit to more than $5 billion on the back of higher than expected iron ore prices. Fortescue also announced a much higher dividend relative to a year ago. The dividend is worth about $1.22 billion to the family interests of Fortescue chairman Andrew Forrest and Nicola Forrest, who of course separated last year. Lithium miner Pilbara Minerals reported a massive 83% fall in net profit on the back of the collapse in prices for the battery ingredient. The biggest standalone lithium producer on the ASX fetched an average of $1,645 a tonne for spodumene. Last year, that was $4,993 a tonne. Quite the fall. And fellow lithium group IGO said earnings today were down about 53%. And story number 5 today, Japan's benchmark share index, the Nikkei 225, hit a record high today amid a broad rally in technology stocks and chip makers in the Asia-Pacific region. Why are we so surprised? Because it last reached these levels back in 1989. Back then, it was a bubble economy. Nowadays, cheap valuations thanks to a very weak yen, and corporate reforms are pushing money into the world's 4th largest economy and somewhat luring it away from China. Otherwise, oil and gold are fairly steady, so too cryptos, and the Aussie dollar's buying 65.6 US cents. That's it for the afternoon report for Thursday, the 22nd of February, 2024. Michael Thompson and I will be back tomorrow morning with the Friday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.